Yo, what's up, traders? Marco from Digital Dash. We're gonna be doing another analysis video. We're gonna be looking at ES and NQ again today, and we're gonna be talking about a little bit of what happened last week as far as my trading and some of the tricks that the market pulled last week for people that are specifically trading supply and demand. But getting right into it, we're gonna look at the weekly on ES, and we can see after a lot of selling that we've experienced in the past couple weeks, we had a nice rally, or we attempted to rally last week. We got a nice push up back into the 38.22 level before we started selling off again. So on a bigger picture on the weekly, this candle is very bearish. Seeing this, and all the selling pressure, all the bears came in and pushed this candle back down, and we created this little inverted pin bar that we're seeing now. So looking for next week is going to be major if we take out the lows from last week. If we take out these lows here and this 3600 level, I think it's a psychological level, so it's going to be very important to watch as well. But this inverted pin bar is starting to look decently bearish with all of that selling pressure, selling that back down. You feel me? We rallied for a little 2 days or whatever. It felt longer. Not going to lie, it felt much longer. And then the sellers came in up here and we started rolling back over. So again, below, of course, below those lows is going to be an important area to watch, and this was a pretty decent key level as far as resistance in the past, turn support, and we held above it until now. So if we come back below that 3600, we could see a lot more moves to the downside. That's something to look out for. So with this little rally from last week, we had supply zones above. We continued to take out lows here, even though here we did make a higher low, so that's something to pay attention to. As we started, this began to show us signs that maybe we could be turning bullish on the 4-hour, but then we did take out these previous lows, so it started to look very bearish for me. So any highs we created after that, I was looking at short supply zones, and as you can see, we pretty much based out. Go down to the 1-hour time frame. We pretty much based out here, consolidated for a little bit, and then ended up heading higher, creating demand on our way up. Trying to short these demand zones. Of course, with it being so bearish, I was in the mindset of, we're gonna go into these supply zones like we did here, reject, maybe retest these supply zones, reject, but we ended up ripping straight through these supply zones. So looking for an entry here, maybe a rejection. You could have got faked out here, trying to take these zones, even extending this 1-hour zone. You would have just got completely ran through trying to just short these zones, right? As we made it up into these higher supply zones, we then began seeing reactions. What I was looking for was this change of character here, this break of structure. We got to change of character here as price broke below, and then we broke below these lows here, broke and closed below these lows here, and then at that point, that's when I began looking for sells. But of course, again, there is supply that's created within this area. If you tried to short it, you would have got ripped through. But really, that's when I saw this. That's when I began to say, okay, maybe this trend is starting to lose a little bit of steam. It may start reversing soon. And that's what we saw happen later on in the week. After we broke and cleared those, held below those lows, we rallied back into another area of supply. As you can see, we never broke above that supply. We never invalidated that supply. So even if you were to take an aggressive entry with your stop loss above the zone, you would have been good, right? But with the trend being so strong, you would definitely be better off waiting for some type of confirmation, like seeing an indecision candle here and then the lows of that candle being taken out before looking to hop into the downside. But after seeing this break and close below this structure, it was a better setup to take. So from that, we got a nice huge drop to the downside, 171 points from this supply zone, and we're officially back into this downtrend, right? We broke all the lows. We're breaking structure on the way down. We do have demand below here at this 36 zone. We were getting a bounce from it when we closed Friday. Market hasn't opened up yet, but we did get a slight bounce from it as the market closed on Friday. So this is an area we want to see get taken out before we look to head lower, and then under that another zone at around 3585. We want to see that get taken out, as well as this 3600 level. And once we're fully below there, then we're gonna be looking for a lot more downside from that. But as far as getting involved with this, want to see this get invalidated. Of course, everything else is invalidated. These lows, we're breaking a lot of structure, closing below a lot of areas. If we can get below this zone, get this zone invalidated, and then get a push higher, maybe we can get another entry. On the 1 hour, we have a 4 hour. Let's see, where was it? I'll take this. I'm not sure what this was. Maybe a 30-minute. Yeah, it was a 30-minute zone here. On a 4 hour, we can just draw that in real quick. Possibly a zone there. Possibly a 4 hour supply zone there. So it's just going to be something to pay attention to as far as entries to get involved. I like the 30-minute better because price never came back above the zone in the 30-minute. It was there. Price never came back above it before it made the down move. So I'm watching that 30-minute zone. That 4 hour zone is a strong level, trusting the higher time frame, so you guys can keep that on just in case. But I do like that 30-minute zone. So once this zone gets invalidated, we close back below this zone. If we can get a push higher and then a rejection, that would be a possible area to get involved at these supply zones. Or if we just break them and close below these lows, just hopping in and going below those lows. If you guys watch me, I don't really like hopping in right below the lows because that's just how people get trapped. Like back here in the past, people hopped in short below these lows, and they got stuck, and then you get a rally like that when people get squeezed out. So I like getting involved before, and then holding carefree as the move goes lower. Taking a quick look at NQ, pretty much the same thing. A little bit of demand below that has to get out the way first. We need to see these zones get broken and closed below. Again, supply above areas where we could possibly enter on that trend and hop on. But demand, couple areas of support below that we want to see get invalidated before we can look at a head lower, a move lower. But I don't really trade NQ that much, but it's pretty much the same thing. Those are pretty much the same levels that we need to see get invalidated. But yeah, man, as far as ES, like I said, you really have to wait for confirmation. It's been a tricky week for me. I'm not gonna lie. Just being bearish, seeing so much bear activity and wanting to go short when you get those retracements, which in this case happen to be a reversal. It's very hard trading supply and demand, telling the difference between retracements and reversals, because just like if we're looking to get involved at these supply zones, we will be bouncing from demand, and we'd have to start moving a decent amount higher in order for us to get involved on a rejection to go short. So the thing with that is you'll have a change in trend. The trend will change in order to get, if you're waiting to go short, the trend will change from a downtrend to an uptrend in order to get to the next supply zone, right? So it's very tricky. It almost feels like you're counter trend trading, but you just got to make sure you're not closing above any significant highs, any significant lows. You're not breaking any structure, and as long as you're within those parameters, then you can enter at supply and go short against price heading up, and vice versa, right? So really make sure you're not invalidating any higher time frame going against the trend. Same thing with here. We had a pullback here. Let's see. Let's take this little mark. We had a 2 green candle pullback here. So on the 4 hour, so we wouldn't want to see price close above this if we were bearish, right? And price did close above it. So trying to short here would have worked, but trying to short here after seeing that close above that structure wouldn't have worked, because technically we're now bullish. In this case, after that we broke above it, then these will be our new lows to watch. Down here will be our new lows to watch. So I guess down here, this green candle will be our new lows to watch, as we have broken above this 2 candle pullback, broken above those highs, closed below those highs, and then we were finding where our new lows to watch would be at, and then we went higher. So as long as there's no changes in character, there's no breaks of structure, then it's decent. When you're looking to take rejections after a rally and you're looking to take bounces after a sell-off, it is just very tricky sometimes, especially if you're not patient waiting for the proper setups. And that's what kind of happened to me last week. We saw the sell-off, I saw the consolidation, and I still tried to short at supply zones. And it's all about context when it comes to supply and demand. It's all about the market context and what the market's telling you when it comes to supply and demand. You don't just buy at demand because you're at demand, or sell at supply because you're at supply. You want to wait for the market to give you signs of a rejection, like we got back here. We rallied. You don't want to just buy it because you're at supply. We then got some consolidating. The buyer candles got smaller and smaller. They wicked out. And then we got signs of move to the downside, but we also had this breakdown here, which gave us the context that the market was possibly changing from bearish back to bullish, right? So those are the things you want to see when it comes to supply and demand. You don't want to just jump in because you're at a supply and try to short it like back here, especially when you have signs like this breaking close above these highs, right? So a couple things to look at for next week. I hope you guys trade smart. Wait for the market to develop as always. Don't rush into anything. Wait for signs. Again, like we just covered, wait for signs of a reversal. And, just trade smart, and I'll catch you guys in the next video. Thanks for watching.